Hi, good evening to all of you. My name is Jake Chow. I'm your host tonight, and on behalf of CGS-CIMB Singapore, I thank you for joining us as we bring you part three of our webinar series, Dominance of the Virtual World, the Rise of the Internet and Electronic Gaming Industry. Before we start, let's state our disclaimer. Tonight's webinar is purely for educational purposes and shall not be relied upon as investment advice. We have done our best to present accurate information, and we shall not be held liable for any potential losses. As a reminder, the audience is on listen-only mode, with all lines being muted. This webinar will be in an interview format, and over the next 40 to 45 minutes, I'll be fielding questions at our guest, and we will reserve the last 10 to 15 minutes for open Q&A. During the session, if you have any questions, do not hesitate to raise them in the Q&A function that you see on your Zoom platform. We will do our best to answer most, if not all, of the questions after the interview segment. I quote from one of my favorite scientists, theoretical physicist, Professor Michio Kaku. He's a co-founder of string field theory, and he famously said, eventually, a computer chip will cost a penny, which is the cost of scrap paper. They will be everywhere and nowhere, including your eyeball, in your contact lens. You'll blink and you'll be online. And who are the first people to buy internet contact lenses? College students taking final examinations. They will blink and see all the answers to their exam right there in their contact lens. So we are entering a new era where the internet itself could become BrainNet. BrainNet could replace digital internet. Instead of zeros and ones, you'll send emotions, feelings, memories on the internet. And of course, teenagers will love it. Instead of putting a happy face at the end of every sentence, they'll put the entire emotion. Their first dance, their first date, their first kiss, right there on the internet. And that's going to revolutionize entertainment. Therefore, the global internet sector is one of the most compelling investment themes today. It sits at the intersection of three major trends: e-commerce, social networking, and the Internet of Things. It is also the melting pot of future technologies from payments to autonomous vehicles, a powerful force that has changed our lives today, and it will continue to shape that of our children. More often than not, these developments are broad-based, rapid, and difficult to understand. Investors frequently ask how they can best invest in the technology sector, and we think a globally diversified portfolio of the strongest internet companies could be the best way to capture that exposure. And joining us tonight is Kelvin Neo, ETF development specialist from Nicole Asset Management. Hi, Kelvin. Great to have you with us tonight.
Hi, Jake. This is Kelvin here. It's a pleasure to be on the webinar as well.
Great. At Nicole Asset Management, Kelvin oversees the internet business development function in Southeast Asia, and he is also responsible for conceptualizing product ideas, designing product specifications, and transitioning product designs to investment management. And prior to this, he was a multi-asset, multi-strategy senior analyst from AJ Capital. Kelvin graduated from NUS with a Bachelor of Mechanical Engineering and a minor in Technology Entrepreneurship from the University of Pennsylvania. And over to you, Kelvin. Would you like to give us a brief introduction of Nicole Asset Management to our audience?
Yeah, sure, Jake. This won't take more than 1 minute. So very quickly, Nicole Asset Management, we are a Japanese asset manager, probably one of the larger asset managers in Asia, if not the first or the second. From a group perspective, we manage assets of about $250 billion. But maybe what's more important is that we have a very big ETF business running at about $90 billion, which represents about 35% of our overall AUM. So that makes us probably among the top 10 largest ETF issuers in the world. Next slide, please. Next slide, please. Thank you. Yeah, so just want to mention that we have been developing ETFs for a long time, especially back in Japan. We kind of developed our first ETF as far back as 1986. And, in Singapore, we are happy to, after many years of hard work, to be the largest, if not the second largest ETF issuer for ETFs listed on the Singapore Exchange. So I'll just really kind of wrap it up here. Thank you very much, Jake.
Thanks, Kelvin. And as the pandemic has sped up the adoption of the IoT and how it changed our habits, for instance, wider adoption of cashless payment, flexible working place and working hours, and as long as there's internet connection, people are doing more online shopping, streaming of videos, and seeking online entertainment. And this trend is likely to continue even after a vaccine for COVID becomes available to the public. And Kelvin, would you tell us why Nicole is currently focusing on thematic ETFs?
Sure. Thanks, Jake. So, Nicole is focusing a lot on thematic ETFs today. I mean, recently, I think over the past 12 months or so, we kind of launched 2 thematic ETFs on the Hong Kong exchange, actually. But that said, thematic investing is really not new. What is really new is that the way thematic investing is done has been changed by the evolution of technology, or rather made possible by improvements in technology. I think at the core of thematic investing is the ability to manipulate large sets and volumes of data.
Yep.
And higher processing power today allows us to do that. And how exactly it allows us to do that is it allows us to extract very specific data points pointing to very specific investment themes. And by creating investment products around that, investors are able to capture higher alpha than traditional broad, say, equity indices. So as a representation here, of visual representation here is really on this chart where I show the index the performance, total return performance of various indices over the very long term for about 20 to 30 years. And what you can see here is that, thematics indices, for example, those that give you exposure to, say, internet, video games, robotics, 5G, cybersecurity, they have massively outperformed, traditional broader equity indices, even like the S&P 500, the Nasdaq 100, and definitely, relative to the Singapore STI. So really, thematic investing does give investors the ability to capture higher alpha relative to the broader indices.
Indeed. I believe it's old economy versus new economy.
Sure.
Yep.
Could well be that.
Yep. And Kelvin, I'm also curious why the Nicole AM decides to track the IH FactSet Global Internet Index. Are you able to share with us the key deciding factor and the methodology behind it?
Sure. So the IH FactSet Global Internet Index is the underlying index tracked by one of our thematic ETFs, which is the Global Internet ETF. That's listed on the Hong Kong Exchange. The reason why we decided to work with SGX as well as FactSet, it's really because the index design process can be quite data heavy. And because of this, we really like the IH FactSet partnership, with the IH providing the technology infrastructure. And maybe many investors don't recognize that, IH does have award-winning, index business, which is very technology-centric. And FactSet, they are a very reputable financial data provider with almost 4 decades of experience there.
Yep.
And if you kind of think about, the index methodology, it's like we really like the the methodology behind the underlying index. So a key aspect of that methodology is that companies in the index are really screened for exposure to internet-related revenues. You kind of see here in the chart, the little red circle there.
Yep.
That's actually a very unique aspect of how we construct the underlying index for the ETF, right? And this is achieved by building blocks termed as RBICs. So if you kind of go to the next slide, RBICs really refers to the revert business industry classification. I mean, it's a fairly long term, a bit wordy, but put simply, what we are able to do by manipulating data is to basically, decompose the traditional revenues of various listed companies into more basic building blocks. So in this slide here, you kind of show the different, the various building blocks. We call them level 6 RBICs, right? They're the most basic levels to how we build up the revenue exposure. And you can see that we kind of classify the exposures to the internet sector, through say blockchain technology, cryptocurrency trading, mobile platform applications, even internet retail, etc. So by decomposing the revenue of a traditional company and then kind of recombining them again, we are able to get, or rather we are able to screen more specifically for companies that have got internet revenue exposure, and from there kind of build bottom up, a basket of stocks that gives investors that very specific thematic exposure to global internet.
Yeah, that's true. That's true. Actually, for my own screening right now, I'm just down to level 4. So this one is definitely a bit more deeper than what I'm used to.
Yes, correct. And traditionally, we would not have been able to do it if not for the availability of data as well as the ability to manipulate large amounts of data.
True, true. Good. Thanks for your response, Kelvin. And so what are the key features of the Global Internet ETF, stock code 3072?
Well, I would just say that, very simply, the Global Internet ETF gives you exposure to the strongest 30 strongest internet companies out there in the world today. It's a very simple proposition, but a very powerful one. And here on this slide, it does show you all the 30 constituents as of March that basically investors get exposure to within if they kind of invest into the index. And we can talk a little more about the individual names maybe towards the FAQ section.
Yeah,
but
sure.
maybe more importantly is that if you move to the next slide, I think when we kind of take one step back, investors should and to kind of think about why investors want to have this exposure to the global internet sector. I'll just say that diversification is really important consideration to that. I mean, if you look at today when people think about investing in internet companies, they'll usually only think US or China. It's either US or China, US or China. But when we actually build up this whole basket of 30 companies, we realize that by revenue exposure, the exposure is actually very balanced. It's 1/3 US, 1/3 China, and 1/3 rest of the world. And we really like that because if you really wanted broad-based thematic exposure to the global internet sector, you really want that additional rest of the world, 40% exposure to growth that is outside of the US and China. After all, these are where maybe all the future potential will come from. And of course, maybe the third point would be that from a sector perspective, when investors buy into global internet, you're really taking positions in very specific segments of the internet economy. Mainly e-commerce, that represents about 30%. Online advertising, which essentially is about social media and search engines, digital media and entertainment, and a little bit of gaming, cloud computing, etc. So this is really what you gain exposure into when you buy into the global internet space.
I see. So yeah, indeed, it is very specific engineering of the exposure in this portfolio.
Yes.
And of course, thanks, Kelvin, for this. I believe right now our audience should have a clearer picture of what the Nicole Asset Management Global Internet ETF by now. And of course, we also know that you recently just launched the e-games active ETF, stock code 3091. And this actually brings us to the next segment of this interview, when it comes to thematic investing in e-gaming, which is a more specific team by itself.
Yeah, yes. So what I mean, as a last slide from my section, right? I kind of just wanted to help investors or the participants on the call to kind of see the difference between the global internet ETF as well as the e-games active ETF.
Yep.
And it is the e-games active ETF that was more recently launched on 16th of June 2020, which was sometime mid this year. Right, and there is really a big differentiation there in that the e-games active ETF, which is managed by Chu, actually, I see him just come online.
Yeah.
Hey, Chu. Yeah, it's active, so there's no underlying index, unlike the global internet ETF, which I just mentioned earlier on. So you'll see here that there is just no underlying index, and the underlying exposure is very different as well. So the passive global internet ETF gives investors exposure to global internet sector. But of course, e-games, gives you entirely different exposure to global e-games. And really, trust me, this two spaces is just totally different. I mean, in my own personal view, one is pretty mature and one is just emerging. But I will leave it to Jake, yourself, and Chu to talk more about it.
Okay, sure. Thanks, Kelvin, for that. And I have to admit, I was quite a gamer in my much younger days. Right? I play a lot of desktop games from night till dawn. My parents are very worried about my school. Yeah, but of course I enjoy games like Counter-Strike, which I believe is a classic, and games like SWOT, Rainbow Six, and Championship Manager, I believe a lot of boys love it. So Kelvin, are you into gaming?
Yeah, I am. I mean, like most of my guy friends, I am very much into gaming. I still keep the games I bought when I was a teenager, so they're still in my shelf. my kids are very young, so maybe they will get to play with it one day. But hey, the real gamer here, on the call is really Chu. I think he has got very, very deep expertise, both on a personal as well as professional level on this.
I'm very sure about that. Okay, so yeah, tonight we are very pleased to have a special guest, Chu, who is the equity analyst from Nicole Asset Management and the brainchild of the e-games active ETF. Hi, Chu. Thanks for joining us tonight.
Hi, Jake. Thanks for having me here. And thank you, everyone, for coming along tonight.
Yeah, great to have you. So Chu joined Nicole Asset Management in 2014, and he has more than 14 years of experience in researching and analyzing gaming, energy, and material stocks with a focus in global emerging markets. And before that, he worked at MMG Limited and was part of their M&A team. Before we discuss further, let's watch a short clip from Nicole Asset Management.
Oh, you're gonna play the nice video that we had.
Yeah, that's right.
Yeah, I hope everyone likes it. So this is the video that we came up with when we launched the e-games ETF back in June. So thought that we spent a lot of time on it. So hopefully it will be something that is kind of a nice start to the second section, which Chu is going to kind of touch on. Oh, did we just miss it?
Hang on. Why is it not loading? Cannot go YouTube. Okay, sorry, Kelvin and Chu, I believe we have some technical issues right now. Colin will help us to fix it. And I guess we have to skip that first. And
oh, good.
Well, okay. Okay, Chu, so will you share with us the key drivers and how this gaming landscape has been evolving?
Yeah, I'd be more than happy to.
Yeah.
So, look, I've been playing games since the 1980s, and I think I'd like to highlight to the audience, playing games is nothing new. But right now, we're at a really exciting point in the gaming industry. So let me give the audience a bit of a feeling of why I'm so excited about where we are today. Firstly, I'm sure everyone in the audience has a mobile phone. So your mobile phone in itself is now a powerful gaming device. I must admit, I had my first mobile phone was a Nokia 5110, and the best game you could play on that was Snake. But if you think about how far mobile phones have come, right now they're incredibly powerful, almost as powerful as the PCs we use now. The second thing that makes me quite excited, we've actually got really fast internet. So if you think about the transition from 3G to 4G to almost now 5G, you can use internet on the go anywhere. So effectively, you know, those long commutes you have on the bus or the MRT, a lot of people are playing games on public transport now, and gaming has never been more mobile. The third thing, which has changed the gaming landscape, is now it's very easy to monetize games. You know, everyone is quite comfortable using their mobile phones to make payments. So what we've got here in this slide, Jake, is just about a bit of a history of how we've transitioned through the gaming history. And where we are now, we're sort of like those last four boxes. We're in the mobile games, the tablet games. There's some new technologies coming out in virtual reality and augmented games. But if you go to the next slide, what does this mean for the gaming industry? And we'll just talk. So I've talked about the new technologies, but actually impressively, this is fed through to revenue growth for the gaming industry. So what this table shows is just how the gaming industry revenue has grown over the last 10 years. And if you can see that blue bar in blue, that's mobile gaming growth. It's been growing at 27% CAGR for the last 10 years, which is pretty impressive growth rates. Why has it grown so quickly? It's been a big beneficiary of quite a few of those mobile phone technologies I talked about earlier. But also don't forget, there's been a lot of new gamers in countries such as China, and there's new emerging markets coming up such as ASEAN, India, and LATAM, where the first gaming device a lot of people are getting is effectively the mobile phone. That's where their first gaming interaction has been. So that's a couple of the key drivers which are driving gaming, and why we think it's such an exciting, dynamic space to invest in today.
Okay, good. Thanks for sharing that. Shall we jump back to trying to watch the video right now?
Sounds good to me, Jake.
Okay, let's try, see if it works. Thanks for calling.
All right. That states that actually the game industry is growing. Think about how large this industry are, and then they give it Okay, I guess that sets the tone for it, man.
Yep.
Yeah, I hope everyone gets a good idea of what gaming is. So to give you a bit of a feel of what we're investing in.
Okay, great. Well, it's quite fun to deal with the technical issues. Okay, so let's move back to our conversation. Whew.
Yeah, so I think, you know, what we'd really like to highlight on, you know, the gaming industry, whilst everyone thinks it's a bit niche, you know, actually, if you compare it to movies and music, the gaming industry is actually significantly larger than both of those industries. So I think something we want to stress here in this slide is when a lot of people talk about gaming, you may just think of the, you know, the famous gaming titles like Nintendo or Electronic Arts or Activision Blizzard with their World of Warcraft franchise. Well, what we're trying to do through our activate here is we're trying to invest through the whole ecosystem. So if you can remember my example of the mobile phones that we have today, which are so nice. So if Samsung hadn't made the latest Galaxy, or, you know, per se, Apple hadn't developed the iPhone 11, we wouldn't have mobile games that can be played on these really nice mobile phones. So what I want to really stress here is at Nico, we're investing across the entire gaming ecosystem. So just to give the audience a few of the key buckets within the ecosystem, we've really broad brushed them to 3 key buckets. First, we've got the game developers and publishers. These are the game titles like Tencent, NetEase in China, Nintendo in Japan, Activision in the US. The bread and butter, guys that make the games and publish them. Now, the next bucket is quite interesting. We've got the important hardware and software players. The guys that are behind the scenes, which are equally as important to the game developers, but not everyone realizes are a key part of the mobile game ecosystem. So names like, say, even a Sony, TSMC, Samsung are pretty important components of this blog. Last but not least, if we didn't have the internet, guys like Singtel, we wouldn't be able to have this Zoom call tonight. And likewise, we wouldn't be able to play online games. So I think, communications and infrastructure is equally as important as anything. And I'm sure everyone's had a frustration of not having the internet work. And a lot of gamers need the internet to play, obviously, online games. So when we think of all these 3 buckets, that's our investment universe for the active e-games ETF.
Yeah, that's good. So since you mentioned the investment angle that you have, are you able to tell us a little bit more about your investment process?
Yeah, no, definitely. So I think the important thing to note as investors, whilst the thematic is very exciting and high growth, we don't treat this strategy from an investment view any differently from our other strategies. So Nico Asset Management, we're bottom up, we're long-term investors. We typically invest for a 3 to 5 year horizon, and we actually have a robust investment process behind the scenes. So what this just outlines on this slide is just the steps we go through to build up our portfolio. There's a lot of detail in here, but I think the key thing I want to stress is we have an active process which is no different to any of our other funds in how we invest to derive our portfolio. And I think it's really important to highlight tonight, it's just not me picking stocks by myself. We're actually leveraging off all the analysts globally of Nico Asset Management to find the best stocks globally in the e-game space. So we have analysts in Japan that are frequently talking to Nintendo. We have analysts in Shenzhen who are talking to all the A-shares and China gaming place. And we also have analysts, in Edinburgh who cover the global stocks quite closely. So that's what I'd like to really highlight about our investment process. Look, there's a lot of people that think gaming's a bit niche and a bit of one-hit wonders, but actually we're able to apply our rigid process to find the best gaming ideas globally.
I see. It still sounds quite systematic to me, despite not following an index.
Yeah, definitely. So I think from our perspective, we're quite excited about it. We look for the best ideas where there's growth potential and effectively uncovered gems globally.
That's great. Okay, so Chu, would you like to highlight a few companies in the portfolio that you have high conviction in?
Yeah, so I think what I'll do for the audience tonight is I'll probably try and talk through 2 stocks you've never heard of, and hopefully everyone can learn something new and just show you how we think about stocks in the global e-games fund.
And Chu, and I kind of want to remind everyone to call, it's I just caught that, right? Is how you think about the stocks and not so much of what you think is the best stock. And I think that's really more important, how you go about looking for a good game company. I think that's the valuable part.
No, definitely. So the first stock is NCSoft. So just for everyone's background, NCSoft is a Korean game developer and publisher. And a bit of background about NCSoft, they've been around for effectively 20 years. So what do we like about NCSoft? So if you look here, this is a table showing NCSoft's revenue growth. And actually, NCSoft has only made 4 gaming titles in this entire 20-year history. But what we're looking for in the kind of gaming IP is we're looking for a game developer that can repeatedly monetize their titles. So you can see in 1998, NCSoft had one title. Then throughout the 90s, they went to 4 titles. But they've got a really good track record of just using these same game titles and releasing new editions or new versions of these titles. Recently, they've made a big push to mobile gaming. So if you can see in 2017, the revenue for NCSoft has increased quite a bit. That was their big push into mobile gaming, where they were really able to successfully transition their really strong personal computer titles to the mobile gaming space. And now the second part you'll be wondering is, how does this lead to share price performance? So if we could turn to the next slide.
Yep.
This is an example of the share price performance of NCSoft in the last 5 years. So what I really like to highlight about gaming companies, they're actually great business models. You actually get all your cash upfront from the customer, and there's no working capital issues. And you can see here, NCSoft's share price has been pretty correlated with its pretty impressive growth profile during the last year. So the market really rewards NCSoft for its growth in revenue, and you can see that it's the share price performance of NCSoft. So this is the bread and butter of what we're looking for in our game developers bucket. Sort of like gaming companies that aren't one-hit wonders. We're not looking for, next big one-hit wonder, but they don't do anything after that. We're just really looking for these gaming companies that have strong intellectual property that can consistently monetize these titles. So, if you ask me how long would I hold an NCSoft for, I can't see any reason to sell it, because they've just got that consistent track record over 20 years where they're just consistently monetizing their IP. And this is what forms the backbone of our strategy. So if I could move on to the next slide, I'll talk about a company that the audience may not have heard of. So earlier when I was talking about the buckets we invest in, NCSoft was in that game developer and publisher bucket. Keyword Studios is probably in that hardware and software bucket. So what is Keyword Studios? It's not really a game developer, but they're a beneficiary of the global gaming landscape. So what they effectively are an outsourcer. So nowadays, game developers don't want to do all the functions of building the games. Sometimes they want to outsource the art. Sometimes they might want to even find a translator in Indonesia. So Keyword Studios is a big beneficiary of the growth in global gaming, and you can see the revenue growth in the last 7 years. They started off with a pretty humble 16 million euro in 2013. They've almost grown that to 320 million in 2019. So this, when I talk about ecosystem and our portfolio, we're looking for these ideas that, not a lot of coverage out there by the sell-side community, not really appreciated, but this is what we're trying to find in the ecosystem, which is a great beneficiary of global gaming. And if I show you on the next slide how these sort of like revenue projects into share price performance, you can see here stocks like Keywords have done tremendously well as a result of the growth in global gaming. And like NCSoft, we don't see any change looking forward. We're still as positive today as, maybe 3 years ago on these stocks. We continue to believe there's a fair bit more growth to go in the global gaming landscape. And that's just 2 brief examples of sort of companies we like. I think if we bring it to the next slide, the audience can get a really good picture of just what makes up our portfolio. So like I said earlier, we're scouring the globe for the best ideas in e-gaming. We're quite systematic about it. We're not looking for anything too speculative or one-hit wonders, as I like to say. And actually, we've formed a pretty diverse bucket of stocks here. So maybe I'll just talk about country allocation. You can see here, whilst we have concentrations in China, Japan, US, the typical countries you think about gaming, actually another 30% is quite spread out. We invest in countries like South Korea, even Russia and Brazil, where, believe it or not, there's actually up-and-coming game development companies out there. So we literally look everywhere for these gaming companies. And likewise, I think where our fund is quite unique, if you look at the geeks industry classification, you can see, if I was to compare us to a few of our peers trying to invest in this space, they'll be pretty concentrated in the entertainment geek sector. But actually, we're quite diverse. We're looking across the ecosystem for the winners in the space. And maybe if I bring it to the one more slide, just for the audience, take a few moments to just breathe this in, because there's a lot of data here. This is just our portfolio's top 30 stocks. And, you know, in the Q&A, I'll be more than happy to take any questions on any of these names. So whilst you may be familiar with quite a few of these names, there's actually quite a few that, you know, you may think, hang on a sec, these aren't e-games companies. Like, we've got a few data center plays. We've got a few companies that do bits and pieces of the ecosystem. But I'm more than happy to talk through some of these in a bit more detail in the Q&A. So that's a bit about it for my spiel, Jake, just on the investment process. And look, I really like to wrap up. We're working hard behind the scenes to find the best ideas globally, and I'd like to be happy to take any questions when we're due for Q&A.
Okay, sure. Thank you so much, Chu. I can't believe you really give us a lot of insights into how you look for the best ideas around the world. And Kelvin and Chu, are you able to share with us also why you choose to launch an active ETF, and what makes you stand out in this space?
Right. Well, so I mean, I kind of listed down some useful points to take note of, and maybe the most important point is actually the last point here. You know, when we decided to kind of wrap up, you know, Chu's portfolio in an active ETF format, the real focus here was really to lower the transaction costs. I mean, if you were to buy into you know, typical mutual fund, they would come with trailers and rebates, and that typically raises you know, the cost for investors. And maybe the next most important point will be point number 2, which is it's really about potential for active returns, right? I mean, Chu has mentioned earlier, and I myself had mentioned earlier on, that the e-game sector is a very young sector. It's also changing very quickly, happening in many parts of the world across many different subsectors. You know, and because it's evolving and very much forward-looking, we felt that an active strategy where we have analysts and fund managers actively looking for the best companies made a lot of sense.
True, because what I did notice is there are a couple of passive competitors in this space. Yeah, so I noticed that you are the only active guys around.
Yeah, you're right. I mean, I do have a slide on that, actually. If you kind of go to the next slide, I think.
Yep.
Yeah, here, yes, just nice. So, I mean, over here, I kind of did a comparison between the active ETF that Chu manages. That's 1991 Hong Kong. And you see that that's sitting just right in the middle of the table, and running an active strategy. And I kind of compare with some alternatives that investors might have today, you know, specifically passive e-games or esports themed ETFs, like the VanEck Esports, the Roundhill Nerd, you know, or even the Global X Hero. I think what I really want to point investors to is on the concentration risk. So if you see the bottom of the table, and I've kind of ranked this ETFs based on the number of constituents held by the ETF. You have VanEck Esports as the most concentrated one. Top 10 holdings in esports represents about 61% of the entire portfolio per se. Now that's very, very concentrated. All right. And then kind of you move towards the right, it just gets more diversified until you get you know, to the one by ETF MG, where you have 88 companies and each one is only probably like at most 2.5%.
Yep.
You know, I kind of show this because I want to remind investors of where we are in the market cycle today. You know, given that markets have been very much liquidity driven, you know, a lot of stimulus and a lot of liquidity have entered the market. You know, prices have gone up quite a bit, and I mean, we are all very aware that you know, stocks in general have run very hard, very, very hard. You know, you really need to think through a little bit if you wanted exposure to market beta, right? Would you buy the top 25, or would you go for something that is more diversified?
Naturally, yes. Yeah.
Yes, right. I guess that it's intuitive for investors today to take note that a little bit of diversification in today's market, and not just go chase the largest cap companies, it might be a little bit more sensible if you were looking to kind of invest over the slightly longer term. And coming back to the ETF that Chu manages, you'll see that there are 41 companies today, and the top 10 really only represents a quarter, of the weight of the entire ETF. So really, there is diversification benefits there to be derived, and not forgetting just last point, the buckets that Chu invests into. Chu doesn't just buy game companies; he buys the entire ecosystem. So he can buy hardware and software companies. He can buy a bit more boring companies like infrastructure, and those allows him to rotate his risk. If you find that there's a lot of risk in specific segments, you can actually rotate into the least risky segments. So I'll kind of just end it there.
Very good. In fact, you really show us that there's a lot of thought process going on behind how you engineer the portfolio strategy. And
yes, we do. We work quite closely with the investment teams before we come out with the product.
Right. So I would say, just looking at the numbers, it definitely is more balanced than what you should be looking for in this space, especially. You're sitting right there in the middle. So
yeah, and I would just say that in today's market, you really need to be balanced.
Yep, true. Okay, so would you tell us the key product features for this ETF?
Sure. Sure. I'll just run through, maybe just take a minute. Just a summary. We launched this eGames Active ETF back in June 2020, and is actively managed. There's no underlying benchmark. The exposure, the investors get is really global eGames sector, and I think Chu has a lot more to talk about why this is an attractive sector for the long run, right? So in terms of fees are very competitive because of the ETF format.
Yep.
For the first year, the management fees is only 50 basis points, which is way low than what you would get relative to comparable mutual funds out there, which is typically 1% or more.
Yeah, usually 1.5.
Yeah.
Yeah.
North of 1%.
Yeah. Okay, great. So, and I would like to say, Kelvin and Chu, thanks for coming on this program and answering all my questions. I think if you don't stop me now, we can go on for hours. So right now, I think we should be opening up the floor to answer questions from the audience, and I see a list of questions that came in. Would you like me to pick, or would you like to pick yourself?
No, let's start from the top.
Okay, that's great. That's great.
The first question: is it too expensive to go into technology stocks now? So it's a great question. So I really like to highlight something about e-gaming, which is a bit different from technology stocks. So I was looking at our portfolio valuations today, and the valuation was only 20 times PE across our portfolio, and about 20% growth for next year. So I agree that there are some other sectors which are pretty expensive stocks and very limited earnings. But the key thing I want to highlight about global e-gaming in general, actually the companies are still very well priced here. So I mean, if I give specific companies like Activision and EA in US, still trade on 23 times, 24 times PE, which is quite reasonable for a really steady blue chip sort of like gaming company. So we're not too concerned about valuations for global e-gaming at the moment. That's my thoughts on that question.
But Chu, actually, now that you mentioned this, and I've heard you say this before in other webinars, right? The 20 times PE that you see for game companies, I mean, if we look at the historical, the historical range, is it how much have how did the sector trade, let's say over the past 5 years or so?
Yeah, to be actually something really surprising. The only thing that's changed about a lot of these companies is the earnings. So really? when I look back at these companies sort of like 5 years ago, the PEs were all quite similar. The thing that the market underappreciated was just the growth in earnings. And actually that has been the key driver for this sector. So there hasn't been a multiple re-rate of the stocks.
That's pretty amazing, actually. I mean,
yeah, so the best thing about e-games is actually earnings have been the key driver of share price performance, which is nice because like anything you want to buy, you genuinely like to have earnings behind your valuations for a lot of these stocks.
I mean, it's good to know that it's organic growth that is really driving all the performance on the stock market. So
yeah, and I mean, going forward, we're still quite positive. So I mean, to give the audience a feel of what we're quite positive about, there's still a tremendous amount of potential in countries like India, you know, the ASEAN bloc, even LATAM. We've seen some of our companies that invest there benefit a lot. And the reason why, what we're seeing in all these countries, the first gaming device you're getting is your mobile phone. So literally anyone can game. So we're still quite positive going forward. And also, I won't have enough time to talk about the full complex tonight. You may see esports as a big thematic in the future. To give the audience a feeling, the global e-gaming revenue is about 170 billion, but esports last year was only $1 billion. But there's so much runway for esports to go. That's what keeps us pretty passionate and excited about the growth in this industry.
So, Chu, I have a question for you then. Is there any chance that this ETF will go into esports?
Definitely. So some of the ways we are playing esports at the moment is through the live streaming companies. So we actively invest in both Amazon, who's got the Twitch platform, and a company in China named Huya, which is effectively live streaming in China. So that's how we're tackling it at the moment. I must admit, esports is quite fluid at the moment. So, you know, there's a lot of companies out there which don't have any earnings that have really got a bit of esports hype. So we prefer to avoid those companies, but we're looking for those fundamental, bottom-up, solid companies that, you know, will still be around in the next 5 years plus. So it's a very exciting place, and we're actively looking for it.
But sure, how do esport companies make money though?
Good question. Very much like how football companies make money. Actually, the secret there is they don't. But who are the guys that make money in when you think about football? It's in e-games, it's the game developers. It's the people that provide the streaming platforms. That's where the real money is, and that's where all our active ideas are in esports. So to give a very simple example, you may know games like PUBG and Fortnite. They're big esports games now. People love playing these as esports. We invest in the companies that make these games because they're ultimately one of the key beneficiaries of that.
Wow, this is fantastic. Yeah, and especially when you have an investment team that is able to deep dive into all businesses behind the names that you guys are investing.
That's right.
Yeah, that's amazing. And that's something that what I do on the quant side, we can't really go such deep dive. Yeah, so I guess that's a handicap on my side. Yeah.
So I think that's a fair point.
Yeah.
But there is one more question that I saw was quite interesting. You kind of mentioned that earlier on, but it's probably an important question. It's like, what are some of your key considerations when selecting stocks to add to your portfolio?
Yeah, definitely. So I think, you know, being a bottom-up fund manager, I would argue that the key thing we're looking for in stocks is two things. We're looking for sustainability of earnings. So when we invest in the stock, we want to be able to take a 3-year plus view to make sure that the earnings are still sustainable on a 3-year view. Then how do we pick stocks like that? We look for companies that have strong intellectual property. That's probably fancy speak for a very popular game that we still think will be around in 3 years, or they've got strong, you know, hardware or software applications. So an example of that is we know with a lot of confidence that Samsung will still be making great mobile phones in 3 years' time. So that's a combination of what we're looking for stock. Like I love to stress, we're not after the one-hit wonders. We're actually looking for stocks where we can really take a 3-year plus view on that the business model and intellectual properties in place will stand the test of time. And I think, like, you know, the two examples I showed today, NCSoft and Keywords, are great examples of that. You know, stocks that have repeat, constant monetization of their effectively business practices. So that's kind of how we are looking to invest in this space. You know, we actually take a bit more of a longer term view on quite a few of the stocks we select.
I know that we are running on coming close to the hour, but I do have a burning question actually for Jake. Because Jake mentioned earlier on that on the quantitative side, I mean, he does also have some approaches there, right? So I mean, I'm just wondering, like, if you were to pick like winning e-game companies, I mean, are there specific quantitative factors that you will look at?
Yeah, I typically look for momentum. In fact, NCSoft pop up in my screening model for Korea earlier part of the year, because I was working with some traders trading the Korean market. So of course, there are certain things that the quant are not able to do, like for example, how Chu and his team deep dive into certain things like the foundation behind the business. What I tend to look for is momentum, not just in terms of price momentum, but also earnings momentum. Actually, price momentum actually is quite highly correlated with earnings momentum as well. So if I do not have the luxury of having Chu on my side, I would apply momentum into my models, whether it's a fundamental or multi-factor models. From there we derive what names to select and to have it in portfolio. But of course, I won't be able to tell you what kind of intellectual property they have or they own has got certain strength over their peers. We don't do that, but we typically can still form a portfolio that could potentially rival Chu. But of course, there'll be a certain handicap on our end if, let's say, there's certain changes that we couldn't capture in the model.
Yeah, understand. Sure. It was quite interesting though to kind of hear a little bit about the quantitative aspect as well as the fundamental side.
Correct. Yeah, in fact, the process that we saw earlier is quite similar to what the quants do as well. It's a step-by-step process. You start from your universe and you go into the revenue attribution. Yeah, correct. But that being said, everyone can do their own models. There's no hard and fast rule how you should do it. But of course, the back testing part is the very trying period for most of the quants.
But on that note, right? I mean, maybe this is really my own question to you as well as Jake, right? I mean, going forward, you know, do you think earnings will still play a big part? I mean, or, you know, you're kind of looking at other factors, other fundamental trends or something that's going to drive, you know, a good 20% performance for the next 12 months. If I have $1,000, should I put it there?
I'll let Jake answer that first. I have my own views.
Okay, based on what I've seen so far and experienced so far, price momentum is mainly dependent on the expectations in the earnings.
Okay.
It's very highly correlated, but of course there are some other factors like the quality of the earnings and things like your balance sheet and maybe perhaps some intellectual property issues that could potentially blow up because we are in this tech space. But apart from that, if you are able to incorporate things like earnings and balance sheet, make sure that they are in place. If you're able to create a screening model that's for the input, that's just part one. You still have to figure out how to construct a portfolio, and that itself is a subject on its own, right? You can do a lot of different things, even with the good idea generation. The way you construct the portfolio can actually determine a different set of results. ultimately. Like for example, whether are you going to overweight or based on market cap? Oh, sorry, are you going to weight on market cap? Are you going to weight on factors, factor weighting, or are you going to weight on risk weighting? So all this plays a part in the outcome of the performance.
I see. Hey, Chu, I just saw an interesting question on Kakao Games. Searched, recently listed and searched 30%.
Oh, yeah.
Yeah, so, no, great question. So I must admit, we didn't get much allocation in the Kakao Games IPO, and it actually did a lot better than 30%. It was almost up 180% from the IPO price. So, but the honest answer is, look, on all stocks, we actually take a fundamental view. So on Kakao, the stock did impressively well on the IPO, trades north of 60 times PE now. And the honest answer, so the honest answer to address that question is we just have better options in our portfolio. Like, 60 times, you can get an NC earlier for only about 20 times. So we're quite selective in that rate on that basis. So in our thinking, look, Kakao as a company has a lot of interesting games, but from our perspective, we're pretty fundamental about it when we do our stock selection. But great question, and very relevant observation, which is pretty fresh.
Yeah, true. What I've noticed in the Chinese market, both in Hong Kong and Chinese market, the average valuations for the gaming sector is on average about 40 to 50 times PE. Yeah,
yes.
That's my personal observation. But of course, when you come to stock selection or portfolio construction, you can choose to stay away from the higher valuation names and go for the cheaper ones. Yeah, not necessarily the cheapest, but at least something that's not over a particular threshold.
Yeah, that's a pretty fair point. So we do have a couple of A-share names in our portfolio, Perfect World and Sanchi Interactive. And like you said, I think, we acknowledge that A-share valuations typically trade at a pretty decent premium to the rest of the region. Yeah, so sometimes we got to accept that, but look, I think we tend to be a bit more selective in that market. But I think, just out of interest, I think one thing that Nico has that's really useful is we've actually got a very active presence in the A-share market where, I think something that I'm really grateful for our fund being able to do is we've got the ability to move in and out of the A-shares market, which China is a pretty important part of the gaming landscape.
Yeah, true. Just imagine the population.
Okay.
Definitely.
Yeah. All right. Thank you. Thanks, Jake. I think we are hitting we're past 8 already.
Yeah, I think we are scheduled to finish. Oops, sorry. Okay, so tonight, to show our appreciation to our clients who've been supporting us, and for anyone who actually dialed in tonight, we're offering up to $5,000 worth of NTUC vouchers to anyone who trades any of the 4 ETFs listed above. Nicole AM Global ETF, stock code 3072. Alternatively, the US dollar denominated one is 9072. Nicole AM eGames Active ETF, stock code 3091. And CSOP Chinex ETF at 3147, and also the CSOP Hang Seng Tech ETF at 3033. Please do note that this only applies when you buy, not when you sell. So if you buy 3 times within this promotional period, you'll be entitled to 3 $10 NTUC vouchers. And this promotion starts today from 1st October till the end of the year, 31st December. So with this, we would like to thank you for your participation and end of this webinar tonight. We hope that we have tried our, we hope that we've answered as much as we can. Due to time constraint, we will try to answer that in private, or you can drop us an email, or we can get hold in. You can get hold you can get in touch with us. Okay, so for inquiries and on investment products and strategy, you can call me at 621-08698 or drop me an email at jake.chow@cgs-cimb.com. For inquiries on Nicole ETF products, please feel free to contact Kelvin at 6500-5799 or drop him an email at kelvin.neil@nicoleam.com. And for account opening or any general inquiries, please contact Colin Ng at I have to spell this out because a lot of people will mistook Colin. Yeah. So it's KOLEEN.ng@cgs-cimb.com. Or you may call her at 621-08686. And after the webinar ended, the page will lead you to a survey. So please kindly take a few minutes to fill out this survey form. And I would like to thank every one of you again for being such a wonderful audience. And thanks, Kelvin and Chu, for coming on this program. Last but not least, Colin for helping us, and especially me to navigate all the IT problems for tonight. So, and also thanks to her for organizing the event tonight, and also Janice and Rachel. So I wish everyone will to have a safe year ahead, and hope to see you again next time. Hopefully somewhere soon, maybe end of the year. And thank you so much again. Good night, everyone. Thank you
so much. Thanks, Jake.
Good night, everyone.
Thank you. Thanks. Bye.
Bye.